Jai Hind everyone. Welcome to my YouTube channel, which is explore yourself, banking and general knowledge, etc. Today I am going to describe about rate of interest of Bank of India's fixed deposit scheme, which effect from 18th May 2026. A detailed, a detailed informative story. Introduction. Fixed deposits are considered one of the safest and most trusted investment options in India, especially for people who prefer stable and guaranteed returns instead of market-linked risks. In today's uncertain financial environment, many investors, retired persons, and senior citizens look for secure investment avenues that provide regular income and capital protection. The website of Bank of India highlights a special fixed deposit scheme offered by Bank of India, promising attractive interest rates for different tenures. The scheme mainly focuses on higher returns for super senior citizens and senior citizens under non-callable deposits. This also emphasizes safety, guaranteed returns, and loan facilities against FD. This article explains the scheme in detail, including interest rates, features, advantages, examples, benefits for different categories of customers, precautions, and overall financial significance. Overview of the FD scheme. This promotes a fixed deposit plan for deposits below Rs 3 crore with attractive annual interest rates. The rates vary depending on investment tenure, category of depositors, callable or non-callable nature of deposit. The scheme particularly rewards long-term investors and senior citizens with higher returns. Interest rates for non-callable deposits from 18th May 2026. 1 year fixed deposit bucket. Interest for super senior citizens is 7.30% per annum. Interest rate for senior citizens is 7.15% per annum. Interest rate for others 6.65% per annum. Explanations. A 1 year FD is suitable for investors who want short-term safety with better returns than normal savings accounts. Super senior citizens receive the highest benefit under this category. Interest 2 year back 2 year fixed deposit bucket. Interest rate for super senior citizens is 7.40% per annum. Interest rate for senior citizens is 7.25% per annum. Interest rate for others is 6.75% per annum. Explanations. The 2 year deposit offers slightly higher returns compared to the 1 year option. It is suitable for medium term investors who want stable earnings without taking stock market risk. 3 year fixed deposit bucket. Interest rates for super senior citizens is 7.75% per annum. Interest rate for senior citizens is 7.60% per annum. Interest rate for others is 6.85% per annum. Explanations. The highest return is offered for the 3 year tenure. This shows that the bank encourages long-term deposits. Investors who can lock their money for longer periods benefit from better interest income. Interest rates for callable deposit from 18th May 2026. 1 year fixed deposit bucket. Interest rate for super senior citizens is 7.15% per annum. Interest rate for senior citizens is 7% per annum. Interest rate for others is 6.50% per annum. Explanations. A 1 year FD is suitable for investors who want short-term safety with better returns than normal savings accounts. Super senior citizens receive the highest benefit under this category. 2 year fixed deposit bucket. Interest rate for super senior citizens is 7.25% per annum. Interest rate for senior citizens is 7.10% per annum. Interest rate for others is 6.60% per annum. Explanations. The 2 year deposit offers slightly higher returns compared to the 1 year option. It is suitable for medium term investors who want stable earnings without taking stock market risk. 3 year fixed deposit bucket. Interest rate for super senior citizens is 7.60% per annum. Interest rate for senior citizens is 7.45% per annum. Interest rate for others is 6.70% per annum. Explanations. The highest return is offered for the 3-year tenure. This shows that the bank encourages long-term deposits. Investors who can lock their money for longer periods benefit from better interest income. Understanding callable and non-callable deposits. Callable deposits. The callable FD allows the customer to withdraw money before maturity if required. However, premature withdrawal may attract penalty charges. Interest rate benefits are comparatively lower. Liquidity remains available in emergencies. This means premature withdrawal facility available on callable deposits. This means customers choosing callable deposits retain flexibility. Non-callable deposit. A non-callable deposit does not permit premature withdrawal before maturity. Since the bank gets assured long-term funds, it offers higher interest rates. Main benefits: higher returns, better income for retirees, stability in interest earnings, minimum requirement. This means minimum threshold for non-callable deposit is above rupees 1 crore. This indicates certain conditions apply for non-callable deposits. Features and advantages of the scheme. Guaranteed returns. Unlike stock markets or mutual funds, fixed deposits provide predetermined interest income. Advantage: no market volatility, predictable maturity amount, or safe for conservative investors. Higher benefits for senior citizens. Senior citizens often depend on interest income after retirement. This scheme gives them additional returns compared to regular customers. Why it matters: helps manage medical expenses, supports monthly household expenses, provides financial independence. Safe investment option. Public sector bank FDs are widely trusted due to government backing and banking regulations. Suitable for retired employees, pensioners, risk-averse investors, families planning future expenses. Loan facility against FD. Loan against FD available on callable deposit. This means customer can borrow money against their FD without breaking it. Benefits: FD continues earning interest, immediate liquidity during emergencies, and avoids premature withdrawal penalties. Why FD schemes are becoming popular again? In recent years, rising interest rates have increased the attractiveness of fixed deposits. Reasons include uncertain stock market conditions, safer returns compared to risky investments, better rates offered by banks, financial discipline through locked investments. Many investors now prefer balancing their portfolios with safe instruments like FDs. Who should invest? Senior citizens, people seeking regular and stable income, salaried employees, individuals saving for future goals such as children education, marriage, or house purchase. Conservative investors, those who do not want market related risks. Emergency fund planners, people maintaining backup funds with decent returns. Important precautions before investing. Understand lock-in conditions. Non-callable deposits may not allow premature withdrawal. Compare interest rates. Always compare FD rates across banks before investing. Check tax liability. Interest earned on FD is taxable under income tax rules. Maintain nomination facility. Always add nominee details for safety and easy settlement. Financial planning importance. FDs may not create extraordinary wealth like equities over long periods, but they play an important role in balanced financial planning. Key contributions is capital preservation, stable cash flow, retirement planning, emergency financial support. A well balanced portfolio often includes both growth oriented and safe investments. Conclusions: the fixed deposit scheme highlighted by Bank of India offers attractive returns, especially for super senior citizens and senior citizens. With interest rates going up to 7.75% per annum for a 3-year tenure, the scheme provides a secure and predictable investment revenue for individuals looking for guaranteed returns. The additional facilities such as loan against FD and callable deposit options increase flexibility for investors, while non-callable deposits provide higher returns. non-callable deposits offer liquidity benefits during emergencies. For investors who prioritize safety, stability, and fixed income over market-linked uncertainty, such FD schemes can become an important part of financial planning and wealth protection. This article is for educational and informational purposes only. Interest rates, terms, conditions, taxation rules, and deposit eligibility may change over time according to bank policies and RBI guidelines. Investors should verify the latest details directly from Bank of India or consult a qualified financial advisor before making an investment decision. Returns mentioned in the examples are approximate and may vary depending on compounding frequency, taxation, and applicable bank rules. Thank you very much for your patience. Request for like, subscribe, and share.